Good evening, everyone. Time for another silver update. This is the 8-hour chart of silver provided by netdania.com. You can click on the link below. Now, you can see I've drawn in the major downtrend channel that's been in place since roughly all the way back at least a year ago. And you can see that the $25 price was very, very key. That was the point we bounced off of the top of the trend channel, and we were backing and filling. I was predicting this area at $23 to be very important because that was going to be support, expecting the next rally to go up through that line. Now what we had was we had a smackdown in anticipation of the tapering. That was a long anticipated announcement by the Federal Reserve. We know now that Bernanke blinked and that he didn't fulfill his promise that they were going to begin tapering. They put that off. They kicked the can down the road. We can see the snapback rally in silver back up to 3/4 of this trading range. Now, if we had not had this planned smackdown, but we would have bounced off support and rallied somewhere into here, you can see that we probably would have taken out both of these, this very important resistance line here, but also this downtrend line here, which would have confirmed an uptrend and certainly would have confirmed a short-term bottom in the price of silver. So it was very convenient that they got their smackdown before Bernanke blinked. Now that's really important because we're starting to see now some of the austerity come about. We had this story about the Dutch king say goodbye to the welfare state. This is from September 17th. It's on ABC News. King Willem-Alexander delivered a message to the Dutch people from the government Tuesday in a nationally televised address. The welfare state of the 20th century is gone. In its place, a participation society is emerging in which people must take responsibility for their own future and create their own social and financial safety nets with less help from the national government. The king traveled past waving fans in an ornate horse-drawn carriage to the 13th century Hall of Knights in The Hague for the monarch's traditional annual address. On the day the government presents its budget for the coming year, it was Willem-Alexander's first appearance on the national stage since former Queen Beatrix abdicated in April and he ascended to the throne. Quote, the shift to a participation society is especially visible in Social Security and long-term care, the king said, reading out to lawmakers a speech written for him by Prime Minister Mark Rutte's government. Quote, the classic welfare state of the second half of the 20th century in these areas in particular brought forth arrangements that are unsustainable in their current form. So there you have it, people. I've been telling you for the longest time that they're going to cut the government transfer payments, the welfare, the Social Security, the pensions. It's all going to get cut. There's no question about it because they're broke. Now, we had today this story on Zero Hedge. House votes to taper food stamps. In a tight 217 to 210 vote, the House voted this evening to taper food stamps by $39 billion over the next decade. This bill, setting up a showdown with Senate Democrats, cuts nearly twice as much as a bill that was rejected in June, and as USA Today reports, dramatically larger than the $4.5 billion trim that was passed by the Senate earlier this year. The bill would cause 3 million people to lose benefits, while another 850,000 would see their benefits cut, according to the nonpartisan Congressional Budget Office. Republicans argued that the bill would restore the program's original eligibility limits and preserve the safety net for the truly needy. Now it's going to get cut even worse than that. The White House threatened Wednesday to veto the bill, calling food stamps, quote, one of the nation's strongest defenses against hunger and poverty. You can see the continual growth that we've had in the food stamp participation. Now, the yellow line here is benefit per household. So we're seeing as the food stamps go up, the benefits go down. Again, that's because they're broke, they're out of money. So we have this situation where Bernanke has blinked. They're not willing to cut back on the bond monetization, but they are starting to cut back on some of the benefits. That's not surprising. So let's read a little bit of this article from Bill Halter about the tapering. If not now, when? Yesterday, the Fed announced no taper, so it's full steam ahead with printing and monetizing. Ben Bernanke then did a press conference afterwards and basically said that, quote, the economy is still not strong enough to warrant tapering. Not strong enough, but I thought we went from green shoots to recovery to expansion, normally over a 4-year time cycle. This is year 5 already, and we keep hearing recovery, recovery, recovery. Where's the expansion part? In any case, Ben Bernanke told us what we already knew. The patient is still sick and cannot stand alone on his own and still needs crisis measures to keep from collapsing. Not that tapering is a big problem in the making. I'm not even talking about the hyperinflationary aspect of it, which is problem number 1. The Fed already owns 31% of all 10-year U.S. Treasuries outstanding and growing. They're withdrawing collateral from an already collateral-starved system. The longer they wait to taper, the less outstanding collateral will be available for the shadow banking system to lend against. That is problem number 2. Problem number 3 is that the Fed just told the world that our economy still cannot, 5 years after the fact, stand on its own without a $1 trillion deficit and another $1 trillion annual Fed injection of credit. Maybe I'm old-fashioned or some type of curmudgeon, but my first thought here is that even the average guy on the street is going to start asking some dangerous questions. On second thought, maybe not, as Drudge reported that only 27% of our population even knows what QE stands for, let alone what it actually is. So I encourage you to read the rest of that. That's on Miles Franklin from Bill Halter. So let's look at a video of this is called the living yield curve, and this is a timeline of how the yield curve has changed over time. Now, when we're talking about tapering, we're talking about the Federal Reserve cutting back on its bond buying program. Now, traditionally, the big change we had in the way that the Fed targeted interest rates and the money supply happened in 1980 with Paul Volcker. You'll see this as we begin to play this, but the Fed stopped targeting interest rates and started targeting the money supply, and they just raised interest rates as high as they needed to get a handle on the money supply. Now we're back to where we were in 77, but you'll see that the yield curve is nowhere near where it was. That was actually the end of a inflationary cycle, which was ended finally by Paul Volcker with his very high interest rates. But the question is how can that happen again when the budget deficits are so high? So let's play this yield curve and you'll see how far away we are from the historical norm. There's a couple of things that you can put in here. This is the average. If you put in the average, you can see back in March of 1977, we were very close to the historical average for this yield curve. The other thing that you can put in is a normal yield curve, and we're somewhat close to that, or you can put a steep yield curve. We're about between those two. Certainly we're nothing like an inverted yield curve. The inverted yield curve is what you saw happen under Volcker in 1980, and we're nowhere near a flat yield curve. So let's set this at the normal yield curve, the steep yield curve and the average over time, and watch this as it changes. So I'll begin to play this. Now you can see as the 1980s began, Volcker let the short-term rates go, and that's where we got the steep and inverted yield curve. Now we're coming back in the late 80s, and then begins the first recession of the 90s, and that's where we drop down to very low interest rates. Then we had a recovery in the dot-com boom, and they let rates rise. And then we had the next recession, and they had to bring rates way down, and then they ticked back up a little bit to create the housing boom. And then in 2008 we got the financial collapse, and rates have been absolutely crushed for the longest time. So you can see the latest rate that we have here, the latest yield curve is virtually nothing on the short end, and you have to get all the way out to the 10-year before you even get any kind of yield. So we're still at a completely abnormal yield curve from a historical basis, and again, the issue is not even the yield curve, because the Fed has had to go beyond the yield curve. We're essentially at negative interest rates, because that's what the quantitative easing is. Once the Fed was no longer able to lower rates because they'd already hit zero on the short end, then they had to actually go negative by monetizing the debt. That's where we're at right now. That's where Bernanke blinked at reversing that policy. So you can see that we're very, very far away from where we were beginning in March of 77. Now that was a run-up of an inflationary period. We haven't even entered that period yet. So we're in for a very, very trying time here. We can see that with what was announced by the Dutch king, that they're broke. You can't rely on the government anymore. We know that the food stamps have grown, but they're running out of money. They're starting to cut back, and this is all inevitable. We're already broke, and it's all over but the shouting. So back to the silver chart. We're coming back to that support and resistance line that I pointed out for the longest time at 23. The next move up will be confirmed by a move through 24 and 25. If we get that, based upon this latest announcement by Bernanke that the QE is not going to stop anytime soon, there's not going to be any tapering, it was essentially a bluff, then I expect that we will probably get a breakout of this, and then we will finally get a confirmation that we are indeed in the next stage of the precious metals bull market. And we'll talk to you next time.